Everybody, good morning. How's it going? See, we've got channel members Goose, Rex, Don, Dan, Arturo, Sergio, Mark, Gary, Diane, Jason, Cliff, Svenborn, Ted, and Frank, Will, Kathy. So, for my Termite Trading Lab members, I'll see some of you tomorrow. We have the in-person event starting tomorrow evening. Should be a good time, I hope. And welcome everybody. Did we bottom yesterday? That's the big question, right? I'm not liking the price action off the low so far. We'll dive more into that in a second. And well, a few minutes here. But the big question, the whole, I guess you might say the whole theme of today's show was about the algorithms. And here you go. Here you go. This is from, gosh, I don't even remember which trading. I think it's Goldman Sachs trading desk right here. Been getting a lot of information from them lately. And this one in the upper right is the most important one right here. Right up here. Dun, 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 dun. I can't, let's see. Well, let me pan it. Won't let me pan it. Cool. Anyway, this one right here, the most important one. We have, oh, that's cool. I love how sometimes the mute doesn't mute. All right. We're on all silent. And we've sold off about $193 billion from the algorithms right there. We've actually gone net short. When you look at it across all instruments, we're basically net short about $10 billion. Now, for U.S. markets, we're net short a little over $20 billion. So there's still some longs out there. But in almost every case, we should have buying in the U.S. market. It's kind of interesting, right? Up small is kind of the worst case. Like if we just go up a little bit, the algorithm's not really going to take much action. And this is models run by Goldman Sachs on algorithms and what they expect them to do. If we're up big, well, we're going to get a lot of buying. And they're going to go right back up where they were. That's the V bottom scenario, right? And that might happen. It is very well possible that that happens. Now, if we're down small, the yellow line hanging in there just below the red. And if we're down big, the red line actually has buying on the algorithms. And flat market just kind of coming in there, arcing just below the yellow right there. The worst case, flat market for the U.S. market. We'll see. We'll see. We've got other global trends. We've got, we can make a V bottom up big, up small, kind of a V bottom too for global markets. And then we look at other things like SX5E and Japan. Japan looks pretty bad here. We're seeing potential for a big flush out in those Japanese markets unless we turn it around here. So anyway, interesting, right? I would love to see the green personally. I don't know about you. I vote for green. Can we do it? That's always the big question. Like, can this translate into actual market action? Now, you see where this estimate between now and April, this lines up with seasonality. Holy moly. Look at that. That's almost the seasonality. It's the craziest dang thing. When you go look at the seasonality chart, this looks like, if you zoomed it in, this looks almost like the freaking seasonality chart for the S&P 500. Let me go pull it up. And right there we are. Pull that up. Make it into a, pop it over. Zoom it in. Wrong window, zoom in. Look right down here. Look. That looks almost like the freaking seasonality chart right there. I mean, I don't know. Maybe it works out, maybe it doesn't. a little bit lower, but you know, hey, big drop. If you just adjusted that drop right there, tell you what, it's kind of weird how all these things correlated when they're correlated, not when they're not, but you know, all these patterns kind of coalesce together, create the market environment. And I don't know, man. It blows my mind a little bit. I used to pay attention to all the wrong stuff, and now this is the kind of stuff I watch and pay attention to. So these are simulated flows, though. You know, simulated realized flows, conditional expected flows. So this is all a simulation. It's not necessarily like they can't know for sure what all the algorithms are doing. All right, it's just a educated wild donkey guess right there, and you do your best you can to try to figure it out. Now, we made a lower low on ES overnight, right there. That was lower than the low yesterday. This reversal stalled out right there, and we saw it bleed off after the close, making a lower low. And while we were at Scouts last night, Rongamer and I were like, it's not looking too hot. I wake up this morning, hey, everything's back to green. But now we're bleeding it off again. We were pretty green here. Shortly after I woke up, I was like, hey, we might be breaking higher. But now retracing. So here's the deal. We've got this low. We've got this high. And support coming in. As simple as this right now. Support coming in right here. If we hold it, we may have some upside to go. If we break it, we may go back down, make another low. I'm not sure that this low is the low at this point. We look at the S&P, we were down like 155 points yesterday. We dipped slightly below the zone, and we started a V bottom, but we couldn't get any kind of traction on it. The selling just kept coming. We try. Selling just kept coming. Very bearish environment yesterday. Just couldn't get any traction. Now, big news. If you aren't in Discord, or you aren't in the Telegram, or not even on my X account feed, we filled that gap yesterday. Filled the gap. Look at that. Cha-ching. Satisfy that condition. These are the kind of things that we can make bottoms from. That whole choppy area right there where we left the gap, we tested into it pretty good. Pretty good. Now, another thing that on S&P, we didn't quite hit the 618. This is the only one left that might come into play. We stopped right at the 50% here, but we left this 618 level. So if we start being bearish today, maybe look for support right there. We may rip it down just a little bit further before we V bottom. It's entirely possible that we're hunting for that 618 retrace level. Now, this right here is only marginally below that right there. Not a big further stretch to get there. What is that? Anybody remember? It's the 3-day. The 3-day roadmap line right there. Now, that's not a... You look at in your trading view and you're like, well, 3 days is not a common thing. Like, how did you get that? It's add a custom interval. You can create a 3-day. And why do I have a 3-day? It's on several other platforms. It's just not in TradingView. Now, 1 week is on down here. On down here just a little bit. Now, I don't expect a fast swift drop right to the 3-day. It's possible. We almost never do a swift, fast drop right to the 3-day. Look back in the history of this thing, we almost always get a bounce if we're going to hit the 3-day. You know, COVID was about the only time we ripped down there, and we got there in a few candles. Even back here, 2018, we got a bounce before we got at the 3-day. That we weren't that far away. There we got a bounce. There we got a bounce. That was, you know, we're coming back up through. Even here we got bounces back in 2008. Here we got bounces back in 2000. So we didn't stay that far away from the 3-day all the way through the 2008. Now we're pretty stretched right now. We've really pulled away. And we've come back in the vicinity now. So it wouldn't be a huge stretch to pop on down there. Would it hurt? It probably hurt. A lot of people kind of freaking out about how much of a flash, crash, and generational buy opportunity. We're only down like 10% off the high. Come on, this is a normal correction here. Normal correction in the market. We're not even, it's not a giant crushing pullback, even though it kind of feels like it. NASDAQ here hit the 618. Now this is, the ES does not have to go on down. This could turn into the bounce right here. Now, NASDAQ could turn while the S&P continues to grind too. We've seen that before. It's all about the flow of money. Like money can flow into these 100 stocks. While they do make up a lot of the S&P, but S&P can churn a little bit and still move lower. Just like S&P made higher highs this year, but NASDAQ did not. We made a lower high and then crushed it on down. These are all things to kind of keep an eye on right here. This right there got down past the 1618. I didn't really expect a giant move on down. If we get to the 272, that'll be a 3-day hit right there. So if everything continues being bearish, we could possibly hit that 3-day on NASDAQ. Entirely possible. We did touch that 161 or that 618 retrace of the low from August to the high in December, and now we've retraced it 618. Now, potential upside on this. It's where things get really wild right here. That low, this high, this low. The next move, potential right up in here. Right like that. You'd be like, well, okay, how the devil do I trade in Q, JT? Well, you divide it by 41, you get the QQQ price. Same chart. Oh, I gotta terminate my. So we've got the low here in August. We've got the high. And that one actually, you gotta go to the actual high. Came up just a tad shy, so we may see just a squeak lower right there. This is an ETF. It is a derivative. It is not the cash index. Keep that in mind. There we go. Open it up. Opening up. Starting out a little bit red. Just a few cents. This move right here. That high. That low. Could project us up into this area right here. So can you make money going from 472 up to 620? I'd say you probably can. Probably can. All right. Now, before we talk too much trading, all trading involves a substantial risk of loss. Could you lose money? Yes. Might that not work? Entirely possible, because past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instruments, including stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them. You may lose money. And if you desire personal financial advice, you need to hire and consult a financial advisor, which is not what I'm trying to do. I'm not trying to tell you what to do, just pointing out some stuff. You got to make your decision. Now, this week, interesting week. When we look at the calendar, we have Jolt's Jobs coming up here in about half an hour. About 30 minutes, we might see a little bit of volatility when those Jolt job openings numbers come out. That is from the BLS right there. We also have tomorrow, pre-market. This may be, like, we may just mess around until we get these numbers tomorrow. Like today might, like this, we may be waiting for the catalyst tomorrow. CPI right there. Might be a catalyst. PPI. Like if we rip higher on the CPI, PPI numbers in the next 2 days, we might get a retrace on Monday. All right, we have some inflation expectations on Friday. Now, why might we retrace on Monday? Because we get retail sales coming out on Monday, and that's unusual. Usually it's CPI, PPI, retail sales all together. For whatever reason, they've pushed out retail sales to Monday. Now, usually that means something's not good. To push it out, to do something different with the numbers. All right, usually they just release them. But if something's weird, something's funny, some sort of anomaly in the numbers, they release it differently. It's like almost always when PPI comes out before CPI, CPI is pretty bad. And we get a negative reaction in the market. So retail sales being out back here next week, I don't know. That's a red flag. Might cause, so if we rip, and this is just like, put it all together, it's kind of funny how the market works this way. If we rip this week, we may see a reversal, a retrace on these retail sales numbers. But then we also have, coming up on Wednesday, we have the FOMC right there next week. So we could retrace Monday, Tuesday, get the FOMC, and then we go ripping higher. And this is like potential. Now, it's all possible that it works the other way. We get a flush on CPI, PPI, we get a pop on retail sales, and we get another flush on FOMC. It's possible that it all works backwards. So, is that something I want to see? Not really. Not really. All right. So, if you're new here and you're wondering how you chat, just become a subscriber. Hit the button right over here, right down here. Hit the button right there in the corner and be a subscriber on the channel. A few seconds later, you can chat with me and everybody else on the stream. And if you like hanging out, you like what I do, consider being a channel member. I do appreciate it. And I give you priority access for requests on Tuesday during 30 Minutes of Awesome, coming up at 5 p.m. tonight. So make sure you hit the bell with the notifications. Turn on all notifications so you can get reminded. And maybe go set a reminder on your phone that we have 30 Minutes of Awesome coming up tonight. Anyway, my little spiel. All right, moving on. Let's see. How do we make money today, right? How do we make some money today? All right. This is interesting, I feel like. Turn these log mode off. Look at this. Even though everything seems horrible, we're 10% correction, S5TW is still at 40%. So stocks above their 20-day moving average is still at 40%. So we're only, this whole pullback is only affected about, we've only taken from 80 down to 40. We've only pulled down about 40% of the S&P 500 stocks. That's kind of wild, isn't it? Think about that a minute. Only about 40% of the S&P 500 stocks have experienced a pullback below their 20-day moving average since we topped out back here in early January. It's kind of a mind bender. I mean, messes with me a little bit. S5FI hasn't really responded at all right here. The things pulling back are pulling back, but we're not, this is not widespread. This is not really affecting a bigger, broader swath of the market. Seems like things are bad, but Seems like things are bad, but we're just hanging out at 40. You know, S5TW at 40. S5TH at 40. 40, 40, 40. And it's kind of crazy, right? $40, $40, $40 on all three of them. Now, I was speculating back before that we may come back and retest this line on the 200-day. We're right in reversal territory potential if we're going to hold that. If we fold it, we're probably coming down here below the 20. Right there. So NQ has potential to bounce. Russell in the target zone. Potential to go further. CL. Volatility. Potential to go lower. Gold. Interesting. We glanced off of this resistance zone right here. Pulled down. Actually made a lower low this morning. Retracing this up. So we're going to have to switch down. Check out what's happening. So we've moved down. That was the highest high. 618 retrace. This can lead to a bigger down. If we break back above 29.30, gold may go higher. Set me an alert right there. But this right here has a setup. If we break down below that low, right there, would not surprise me to come on down. That daily roadmap line down there. It's a cautionary setup on gold. Could come on down here to the target where the first move down, the retrace, and the next move down. It's inequality. Or it could come on down to that daily roadmap line down here. So this would be a normal first move down, second move down in proportional equality. Equality at 28.11. 1272 extension at 27.76. And if that area doesn't hold, it's quite possible we push this on down into this 27, maybe even high 2600 area on gold. I would be very cautious right now until this area resolves, doing much on gold. Bitcoin. Let's grab some all-time history here. Lower low. Look at that, baby. Lower low. We touched the top. We touched the breakout. Touch the breakout. Guess what? Touch the top of that breakout zone. Entirely possible that might be done. Entirely possible. All right, let's clean this chart up just a little bit. We did the 30% pullback. Got everybody sufficiently freaked out, and we really hit a 30% pullback now. Fully freaked everybody out. Everybody thinks Bitcoin's trash. Trump didn't do the thing, and blah, blah, blah. Everybody's pretty bearish. So what do we got? Clean her up. None of the bounce we did last week matters at this point. Lower low, reset everything. First thing first, second thing third. Just removing all the extra drawings there. From that low to that high, we have potential to come on down just a smidge more. That would provide a potential bounce. Go look over here. We did a giant over the weekend gap. This is what actually has my attention. We did this giant over the weekend gap right there. Guess what we did? Filled it. Those people that were left with futures contracts hanging since November got caught over the weekend. They finally pushed it back down. Finally pushed it back down. Futures charts don't like to leave gaps. Happens occasionally, but futures charts don't like to leave gaps. Say it over and over and over. Now, potential for Bitcoin to rip. If you believe in it, there's a couple ways to play without buying options. BitX, that's a way to play. BitU, that's a way to play. Do these with leverage, with just shares. You can buy as little as $32.98 right now. You buy one share. You probably even get a fractional share on some exchanges. Like, I think Webull lets you buy fractional pieces of some of these. This one you can get in for $35.71. And you can get 2x leverage on your Bitcoin. Without having, there's no time limit here. That's not bad. Not bad at all. Ethereum. This is below the support zone. We are in danger land. Danger, danger, danger. This has become a little bit of a problem here. Very concerned about Ethereum not being able to pull it out here. We're getting down to the 786 zone. If we dip below this, and we're right in the gotta hold zone. If we dip below this 786 right here, it becomes very likely we're going lower low on Ethereum. So right there around 16, maybe get a little extra, 1650. Set my alert 1645. If we start making a daily close below that, this is where we're heading. More than likely. Statistically, that's where I would expect it to go. Be careful chasing Ethereum long right now. I've been warning that this has a setup to crush it. Not looking good right there. Not looking good. NKD is below that line. Remember the algorithm thing. We might see Algos selling the Japanese market. This could set up a move down here. Lower low than that low right there. That's an important low. And this is where it found support, even though we spiked down here. So there's a little bit of support right up there around 34. And the target would be down below 29, possibly as low as 26 if we get that extension. Something to keep an eye on, because I don't think, despite the fact that the algorithms won't necessarily sell the US market, I don't think that other big traders will stay long in the US market if Japan's market is flushing like this. We get a giant liquidity drop, almost 10,000 points on the Nike. I'm not sure that the US market can stay flat to up while that occurs. Like it certainly didn't over here. We saw this big drop right here, and it wasn't even a 10,000 point drop, really. I mean, well, it was from here to down here to all the way to the bottom. If we do another 10,000 point drop, you can expect another reaction like we had in August. Yeah, this thing started in July, mid-July. We culminated early August last year. You remember that pullback? It's pretty rough. It's right back over here. Started in mid-July, culminated in early August. Right there. This that we're doing right now has been the first real big pullback, proportionally big pullback that we've had since August. And that was right at just under 10%, and this one's just at 10%. So be careful out there. Be careful out there. We'll go through my bias for the day here at the end. So stick around if you want to know. Dollar continuing its plummet down. We're seeing money leave the dollar and head into the euro for the opportunity to buy the buns from Germany when they borrow their 900 billion in euros and start spending on defense and infrastructure. Interesting. Big money kind of flowing that way. So it's in euro, USD, continue to pop. That's money flowing out of dollars and into euros. We might see this pop back up here to this area around $1.30. If this breaks out, we'll probably see it come in here. If we get up through these levels, through $1.18, through $1.23, we'll probably come on up to $1.30. That's what kind of potential we have cooking right now. Now, it would be really unusual if we didn't see some pullbacks along the way on this thing. This has been one nice big fat rip. Entirely possible we get a little consolidation, another move, then a deeper retrace before we get the continuation higher. So that'd be entirely possible. Doesn't have to happen that way. But you see, all the big rips usually get some pullbacks along the way. All these big rips. All right, I go pull everything moving $2 or more up in the market, put it on the gainers list. I grab everything moving down $2 or more down in the market, put it on the decliners list, and we go hunt for opportunities. I look for two main patterns. Those two main patterns are, you've seen the orange line. I call it the roadmap line. Let's just draw it like this. You've seen it. And we look for price to break through it, come back, retest it, come up through a 618 zone right there. If it holds there, it's potential to go down. But if we break through, we expect a move up to the 1272. Now this works the other way also. If price breaks down below this line, we can see a back test from below and get the extension lower if we break below the 618 line. So that's the 618% line right there. And you would run that fib from that low to that high right there. Just like the other way, if you got the pop, you would do this, and you would run the fib line from there down to whatever low this is. Right down here. When we get up through the 618, that's the entry, conservative entry. All right. Now, the other pattern has nothing to do with the orange line that you see on the chart all the time. We do a reversal. Now we come down, we make a low, we come up, we make a high, we run the fib line between those numbers right there. Between those, that swing low and that swing high, we run the fib line, and then we see price do this. Come down, hold the 618 level, and potentially bounce. That I call a measure bounce. When we do that, the target becomes, you run the thing like this. 1, 2, 3 right there at that low, whatever the low is, whether it's at the 618 or slightly above or slightly below, that whole blue zone right there is where we can measure bounce. Ideally, the 618. The target becomes all the way up here when we do this setup. Has nothing to do with the roadmap line. Now, rocket ship pattern, if some way, somehow, the roadmap line shows up right there at that same point, that becomes a rocket ship pattern, and we're probably going to exceed these targets and go way on up to like a 272. So, there you go. That's the two patterns we're looking for, and we go through and look for them on these charts. This one right here, below the roadmap line. It did potentially hit a bounce level down here. But that's a 3-wave up into the roadmap line. Potential for this to crush it on down and get on down to these levels right down in here. Potential continuation down. ASML, still, oh man. Still expecting this to dip just a little bit further down to the lower 600s and set up this trade. We've gotten really freaking close to doing it. Really close. If this could just dip right down in here, could set up a bullish trade. HCA. So far, 1, 2, 3. If this can get continuation up, we could see a bigger bounce here. Move down. Resistance, retrace. Held higher low. If we get a close above that 364 area, probably coming on up to the 440, possibly 460 area on HCA. Service now. Didn't hold the roadmap line. Got a big deep retrace here. Back down to the consolidation. This may dip a little bit further. Now it could be done here. Entirely possible. We kind of back tested the breakout zone. Common. We see it do that. And this might be a bigger 3-day bounce. Roadmap line works on all time frames. If this is a bigger 3-day bounce, we'll probably see it exceed back above the 1016 area with a 3-day close and push on up to 1274 potentially. MSTR hunting a low here. At this point, man, that could be a double bottom. It may not reach down there. That may have been a truncated effort to reach that point right there. This may be a truncation. And this turns at this point. So watch this downtrend of highs. Right there. Watch the roadmap line right there. Still possible, though, we get one more flush. Still possible. 216 would be my ideal expectation of a downside. And if things got a little crazy, we could see 182 on the downside. It's potential that's done, though, as long as we hold that double low. If we start breaking down below it, though, watch out for these lower levels here, 216 and 182 on MSTR. Coin. Push the limits here. I do not want to see this get below this low from back here at this 76 level. If we get below this, I've actually got an alert right there. If we get below that, odds are this pattern's busted and we're going on down on coin. So we've pushed it down to the extremes. It's at the gotta hold level. If you haven't bought anything yet, it's a relatively low risk to reward. If we're going to bounce and go higher, you know, we've got this big, nice, big, fat upside potential here. We did pull our target down, our ultimate target down just a little bit, but this 534 area potential. 187, and you'd risk like about $20 for potential making 3 $300 for almost 400, 300, 350 bucks or so. You see, pushing back above, trying. It's trying. Pushing up through that 76. It's attempting. Now, if we can get a tail like that and still run it down. So be careful here. Does not have to go higher. Does not have to go higher. It's entirely possible. Three-wave retrace. Possible. Be very careful. This is very marginal on the setup here. This first move down, possibly an ABC. Second move, possibly an ABC, but it did have a big, it's almost got a diagonal in there. And diagonals are not the problem here. If this is a B wave, you don't get diagonals in a B wave. You get triangles, but you don't get diagonals. That looks like a diagonal. Gives me a lot of caution. Rolling back down, Baba. Upside target is still hanging out right up here between 160 and 200. FUTU. Been a rough one. Potential, this is actually held up really well with the market pulling back. 139 upside potential there. TXNM. That's already hitting the target. Already on it, well on its way to the targets. 56 up there. Although it's dropping back below the 618. So if it doesn't close up here, watch out for this to come on down. Make a first move down, second move down. It's one of those. We got to be careful there. You can push it on into the roadmap line there. RH. Whew. Down into, like, back to the lows. Looks like a first move down. Nasty. Sideways choppy retrace here. Let's see what we got. Proportion wise. First move down. Retrace to the 618. See that big giant measured bounce potential. 1, 2. Let's use the 3-point tool. That high, that low, this high. Potential for this thing to come all the way back down to 126. Right there. So far, not doing the bullish thing on RH. There's potential it holds those lows and breaks out of this, but that would truncate that last move. But this looks like we're probably going to go down to at least 126. If we do that, somewhere down around 130, gives the opportunity. It could extend it all. It could extend it all the way to 100. So we could flush it on down here. Things got a little overexcited on the downside here. Flush it here. Doesn't hold. Could flush it down here before we find support. Loaf. Chopping around. 1, 2, 3, 4, 5 down. That high, that low. 618 zone. Rejecting off of it. This looks like this may be the setup to go lower here. Down to 25. Seen a lot of bearish patterns on the airlines. Oil. Hanging. NG1 exclamation points. Natural gas hanging out just right below the target zone. We actually tagged it yesterday, so be careful. This can just start rolling over and come back down to the roadmap line very, very quickly. Right there. Right like that. NTES. That came up. Potentially finding resistance right there. Watch for the next potential move down. If we can get the close above there, potential upside right around 111 to 113 area. I like this, the fact that we back tested the downtrend of highs, pushing up, but I need to see it clear that 618 zone to get the continuation higher. Big downtrend of highs, broke out, retested, gives me the thought process we're going higher, but it still can fail and come back down, break down through this stuff. So be careful. So you gotta know your parameters on a trade. Bob X, probably gonna get an extension up to 53. Capital One, hunt for the lows. We've got the high, we've got the low. And next move up, potentially up to that 220 area up there. C-Web, I'm still long shares of this, looking for that 66 targets. Yen, still 68 targets. Ugly, if we're going to extend this higher, 120. Ultra Gold, although this may do a bigger retrace. Be careful. Not convinced. Not convinced. The little smaller baby. This is leverage on gold. Gonna take a break above that high, the highs we had the last few days to push it on up to 117, 120 area on Ultra Gold. There's still the possibility we retrace this more deeply. BVS. Biotech. Biotech does not always follow Elliott wave patterns. Be careful. Made a lower high, higher low. This is just kind of squeezing down on the roadmap line. Be more indicative of a B wave. Like I said, B wave triangle. And we may see a C wave flash down somewhere over here. Baidu. Yeah, medical specialty, biotech. Yeah. Baidu. This has potential measured bounce setup to pop back up to the 117 area up here. 109 to 117. ILMN. Potential to have bottomed out here. Not totally convinced. It's potential. Potential. Three-wave move and continuation lower. Three-wave move goes from that low to that high. We tag that 1.1448. That's 90% of the way to the 1272. Commonly see price kind of stall out there and truncate at that level. So we'll watch for this reversal on ILMN if you're interested in it. Want to see that break above the roadmap line, back test, and then get continuation higher. That would be what I wanted to see. Otherwise, 73 on the downside, possibly 60 on the downside if we're not going to hold support. TSVT, another biotech, pharma. Low price. Be careful. These things don't always follow the pattern when they're low price. May break lower. There's potential for this thing to hold this zone and get higher. But that's kind of three-wave up, three-wave down. Unreliable. BTCO, Bitco. It's one of the Bitcoin ETFs by Invesco. Resistance up here to going higher if we're going to do it. XPEV. Yeah, that one's getting a nice move up off the lows. Deep retrace on that. Move up off the low. Deep retrace. Held above. Potential for this thing to get up into the 35 area before it stalls out. So you may see this rally on up in here before we do another retrace. All right. PDD. Retrace to the roadmap line. If we can bounce, 137, 140. And the potential bigger retrace from the high back here in May to the low dip back here in August would be up to 180. ARTB. Oh, hunting the bottom on Bitcoin. We may need a little bit further to retest this high, this breakout level. Same for Bitco. We may need a little bit lower to retest that breakout high right back here. GEHC, choppy sideways. Not really indicative that we're going to do anything except more choppy sideways. GDXU, be careful here. First move down, retrace, held the 618, sub, little 1-2, potential to get a flush down. One reason I'm very cautious on gold is that the GDX stuff and the leverage 3X potentially set up for a flush on down. All right, decliners, things that were declining. This is usually where we find better opportunities even. Ferg, watching for it to drop on down to that 137 area. Dick's Sporting Goods did the retrace off the high. Not very clear. A lot of sideways chop in that. We've really made a kind of a topping pattern. This looks like it wants to do a bigger, deeper retrace at this point. Be a little bit cautious about that right there. Might see this retrace a little bit bigger. And potentially to retrace back down, test this breakout. TER. Wow, look at that. Right down to the target zone. Potential to find a bottom. 83, 72 on down if we're going to not hold support. ARVN. Biotech got whacked. Potential to go to 0. Be careful. ASAN. I just don't typically trade biotech. I lost too much money trying to chase that stuff, and this is back to lows. May go lower low. Be very careful. T-Mobile getting a retrace, probably coming back down after hitting the 1618. Probably get a retrace back down into this 225, 230 area. I would expect. Doesn't have to, but that would be my expectation is over the coming weeks, we do that right there. HLT. Looks like that may come on down into this consolidation back here. Not far away. May come on back down. Retest that kind of breakout zone from these highs right back in here. EXPE. Coming on back to the breakouts. That could be done, and we get a bigger retrace, though. That was very overlapping. Corrective. Lower high. Could be the first move down. The retrace could take us back down in that zone. Very careful on EXP. Oracle. Boom goes the dynamite right to the freaking target. Oh my gosh. If you wanted a entry on Oracle, buy now. Stop out here. Target way on up. Target around 207, 217 area, right up in there. How fast? You got me on that one. Could be out to late summer. This correction took from December down to March, 3 months. So the next move could take 9 months to do the next move. So we could be out to December before we pop up to the target. App. And if we get the bounce back above the 618 zone there, 588. IHG. International Hotels. Probably got to come back to retest the breakout on down just a little closer to 112. MDB still hunting the bottom. Target down here around 110. Yang. Chopping around. Choppy. Hunting the bottom. But this can keep flushing if China is going to recover. Disney. Ooh. Ooh, man. Ooh. All right. There's the low. Potential 5-wave up. Deep retrace. A little bit sketchier on that move. Potential 5, but it looks like it truncated on that 5th wave. Makes it a little sketchy here. If we hold this zone right here, bullish. If we break down below, we start getting daily closes below here. It's probably got to go on down. Somewhere down here. Something like that. If we could bounce here, potential upside would be somewhere in this 140 area. Possibly even up to 160, but conservative target wise. There you go. It's kind of a flip, coin flip. Right there. So if you're going to buy Disney on the bounce, buy at 96, step out below 90, downside down here, and if you catch the bounce, target 135, 140. ETHD, ultra short Ethereum, keeps ripping. Got that high, got that low. We're in the potential zone here. So extrapolating, all the things we extrapolate out with a leveraged derivative chart for Ethereum, short with leverage. This could be indicating Ethereum's about the bottom and this is about to turn back down. BNTX. Sometimes the leverage charts show things that you just don't see in the regular chart, like on Ethereum. Ethereum looks pretty bad, but that short chart could be indicating that the correction's almost done. Could be. Doesn't have to be. BNTX. I'm thinking this might flush on down. It's pretty bad. Has the opportunity to pop on up to the 161 area. Not looking very strong here, though. We may see this get continuation lower. That low, that high. Continuation lower, be down around 67 area down here. RDW. Red wire. Yeah, it looks like we're going to do a bigger retrace on this one. That low, that high. Potential to come back to this consolidation right here. Potential that was a 1, 2, 3, 4, 5. 5th wave. With a large extension on the 5th wave. So I kind of expect it to come back and bottom in this zone before we turn again. VZ. Hey, morning, Laura. Wrongemer. Watch for a retrace. I mean, it just did. We hit that target zone. And there we are, right back down. So watch for the further retrace on down to the roadmap line around 40, right there. If we can do that, turn back higher, break back above the 618, extension on out, possibly up to 51 or higher. There's the high, potential at low at the roadmap line. Yeah, 48, 48, 51. Yeah, all lines up. Kind of crazy. All right, that's the list. Bonus trades, there's not anything good that was cooking overnight. Just all marginal stuff. S&P 500, still hunting the low. As I mentioned, we may hunt the low through tomorrow on the CPI. So this may be a marginal day here of just bouncing around hunting lows. This may just be a chop day right down here and just grind may just grind in here, make it really difficult, really frustrate everybody, not really break down further. So frustrate the shorts, not really break out higher. Frustrate the longs, just grind sideways into tomorrow's CPI. It's kind of what I expect today. And we might start running down. It's entirely possible if we break down. Entirely possible. Kind of gave you the levels. 55, 60 on the S&P would be a level that I want to see hold. If we start breaking on down below that, I've already kind of given you the 3-day number. Right down to here. If we're going to do a big flush, which would be a couple hundred points, that'd be where I expect it to come on down to. Now, that other level was the 618 retrace, this whole move. So we do have a little bit of support right at that 5,500 area right there. So the 618, that's in a zone to watch. In between where we are and the 3-day. That may be what we need to hit. All right. That's the long and the short of it. I'll be back 5 p.m. do the request show. That's the only time of the week where I take requests for at least 30 minutes. So come hang out, come see me. I'll see you.